So I think another situation that occurs more often than not is you're working, you've got some savings here, you're enjoying it, you're fine, you're going to be in China for the next X amount of years. But where do you start? You know, you've got a bit of money, you want to start having security for yourself for the long term. Where do they begin?
Yeah, you can either read lots of books and try and do it yourself, which generally in most cases we find that people that have self-invested, there's only very few people because of the psychology of the market that are any good at that. I would say work with a professional, somebody like us, I would say that of course, but we're there as kind of we stop people doing silly things. The best way to accrue long-term wealth is to drip feed money into the market over the long term on a regular basis, so paying into a monthly scheme, whether that be a pension, a regular savings scheme, and it's called dollar cost or pound cost averaging, so that you're riding out the volatility of the markets over the long term such that generally you get about, from equities, a 7% return as an average.
Okay.
Now of course some years you'll get more than that and some years you get less, but that's the whole idea of the averaging. Of course when the market sells off, you get to buy more units for your money, and I think Warren Buffett once said that investing is the only game in town when things go on sale, everyone runs out of the store. We see it with clients. The first thing, when the market drops 20%, people say, no, I need to sell everything. And we're like, no, this is the time to buy. The market's on sale. And if you look at a chart of something like the Standard & Poor's, the S&P 500 index in the US, and you go all the way back, you'll see that it starts in the bottom left corner and it ends up in the right hand corner, top right hand corner. And it's not a perfect line, you know, it has wiggled, but it's got there. And that's the story that we try and tell people. It's the best thing to do is to drip feed money into the market, into a multi-asset portfolio over the long term, enough that it doesn't impact your quality of life so that you can't enjoy China, but it needs to be a semi-meaningful amount so that, you know, there's some money there for the future. And that's why you work with us, because what we do is some sort of financial plan. It's like, how much do you need in the future? Have you visualized your retirement? Do you know what you're trying to achieve? And then if you know that, you can accrue, or you can allocate a value to that. How much do you think you'll need every year in retirement? And then you can work back from that, and that will give you an idea how much you need to save.
Yeah, and it's not even just retirement, right? It's not just a pension, it's also a lump sum kind of investment portfolio as well. What can a teacher do? What does a teacher have access to in China? We know roughly the packages to start having a conversation with you. They have nothing. They have no pension in place, no assets, no nothing. Can they still come and have a chat? Yeah,
of course. We've got many clients, teachers, that will invest the minimum. So the minimum is £200 a month with one of the providers, and you just regularly pay that every month, drip feed it into the market over the long term. You don't have to look at the markets every day, you shouldn't obsess over it, just drip feed the money in on a regular basis and kind of forget about it for 25 years and then let the markets do its work.
Okay, and is that for a pension, or can you do it on a shorter term? Like, I know a lot of investments are like 5 years plans as well.
Yeah, so there's a number of different schemes, and it really depends on what the individual's trying to achieve. So we'll sit down, do some goal setting, find out what they want the money for. Whether it's young teachers, obviously a lot of them don't know, so the value is just drip feeding money into the market. Where people fall foul is where they think the regular savings schemes are a pension. They're not officially a pension, but they can act like a pension. As you know, when people leave the UK, they can't pay into their pension schemes anymore. So we need a vehicle that we can pay some money into that gives them the kind of downstream flexibility to have a future income or, you know, capital sum. But these schemes tend to have minimum periods, so you can have a 5-year, a 10-year, right out to 30-year. And the reason they try and lock you in is because they want you to treat it akin to a pension. Whilst it's not legally a pension, it's the fact that you'll regularly save and you lock the money away. They don't want you dipping into it because you can't dip into your pension until you're 55. So it's the same mantra. Equally, you can put it onto what we call an investment platform. You put it onto Ardan or capital platforms. You can drip feed money in there, or you can put a lump sum. You can invest it in one of like 66,000 different securities, bonds, etc. But you can have access to that money, so it's not locked away.
Right, okay.
And then that allows people, you know, a shorter time period for access to money. Now, of course, we say minimum time in the market is 5 years, but life happens, doesn't it? And some people say, well, I don't want to lock my money away for that long, so we'll put it onto the platform.
And what's the main reason that you put money into something like that instead of, you know, a savings account with the bank?
The main reason is inflation, because to put it into context, if you had £100,000 with inflation at 2% and you lock it away for 10 years, after 10 years you have £100,000 in the bank, and maybe a little bit more because you've accrued some interest. But that interest is stripped away, so the actual spending value of that money is only £76,000.
Oh, wow.
So you've lost nearly a quarter in spending power, and that's why you invest in the market, because when you invest in stocks, they generally keep pace with inflation. They have that ability because they can put their prices up. As inflation raises, they put prices up and it feeds through into the stock price. Yeah.
Okay, brilliant. So a teacher can come and have a chat with you, you'll do their financial plan with them. They can start off with £200 a month. So, you know, that's a boozy weekend in Shanghai, to be honest, isn't it?
Yeah, exactly.
I think that's fine. And you can help them on their way and start saving for their future, or planning at least for some security. Okay, Dan, so from this fantastic video, you've had teachers approach you and they want to sign up. They are going to do the minimum 2,500 kwai a month, and they say, okay, Dan, it's save, invest, whatever with my money. Do they send the money directly to you, or how does it work?
Yeah, good question. They don't send the money to us. We don't actually, as Winson Capital, we don't handle the client money. The money is sent to the provider. So if it's RL360 in the Isle of Man or Investors Trust in the Cayman Islands, whoever, they're the ones that actually handle the money. China has some nuances with regards to getting money offshore. You can only remit up to $50,000 a year, but obviously expats get some leeway with that. The only thing is that when you go to take the money out and pay it overseas, you need to have some method of getting it into an overseas account first, so that your direct debit can be picked up from that overseas account. Okay, perfect. And you'll help them with that? Yeah. And an easy way to do it is if you've got a foreign credit card. You can pick it up off a credit card and then just clear the balance. But there are a number of ways, and you can invest up to 7 currencies as well. So it's not just pound, it's US dollars, Aussie dollar, Japanese yen. Wherever you think you're going to end up, it's best to save in that currency. So if you're going to go back to Europe, it makes sense to have your plan and your policy in euros. Brilliant.
I think the biggest thing is for people to start having a conversation with you and start seeing, you know, where that would fit in with them and kind of give them trajectory for the future, wherever they might be.
Yeah, it's exactly true. And often people say to me, oh, when's the best time to invest? There's an old adage in our world that says, well, the best time to invest was 25 years ago. The second best time to invest is today. You know, the sooner you start putting money away, the better your chance of meeting your long-term liabilities and having a pot of money to retire with.
Amazing. Well, thank you so much, Dan, for your time today.
It's been a pleasure.
And I think that this is invaluable advice and at least an insight into, you know, how teachers can get started and whatnot. We'll provide Dan's contact details at the end of the video so you can reach out directly.
Thank you.
And thank you very much.
Thank you.